Well, Mercedes-Benz has rolled out its AMG GT63 and of course one of the most anticipated cars of 2025. And out of the 8 cars, we are halfway through, of course in the year as well and in the cars as well. And I'm joined with Santosh here. Thank you Santosh, congratulations. You know, we are halfway through the year now and you're also halfway through of your plans now to launch more cars. Tell us about the GT63. It's of course a top-end vehicle, surpasses one of the most luxurious and of course a sports car. What is the demand scenario looking like for particularly GT63? Do we have consumers waiting for this car? First of all, tell us that.
Yeah, so Chetan, you remember a decade back we introduced the SLS AMG, which is the Gullwig design, and that was one of the first sports car really getting into India. A lot of customers buying those cars as well, and that also kickstarted this wave of AMG and performance cars in India. Later on, we also had a Formula One at that point of time in India. We started the AMG Driving Academy in the circuit. I think we really pushed this performance sports motoring or sports driving in India. And then, of course, a lot of brands are also participating in this market. For us, we had the earlier GT and even the Black Series that was well received. Customers bought these cars. They're driving it on the tracks, even on the roads as well. And now the successor car, already more than 10 cars. We have customers even before the launch who have booked the cars. So that clearly shows GT63 and the Pro both. Because the Pro is a 2-seater car and the 63 is 4-seater. So it depends on the customer how much track focused they are. They are highly knowledgeable. They love these machines. And today it has come to an extent where we have a customer who is actually, or a couple of them, who are making a track for themselves to enjoy these cars. We have a lot of new tracks coming up, like in Coimbatore we have a new track now coming up in India. So I think this cult is growing. A lot of these customers are also taking cars intercities. The road infra has improved so much that you can also enjoy these cars on public roads, of course on a legal speed limit as such. So I think this only shows the increasing trend for these sports cars in India.
Also, we do see that, this year also the forecast of sales is a little bit flattish to, lower single-digit growth, higher single-digit growth towards 11%. That's what the 9 to 11% is what the growth forecasts are. But how's this luxury segment performing, Santosh? Is it the demand for TEVs is still on the rise like in the last year as well? How's the trend looking like this year?
No, exactly. I think the TVs are still showing a clear double-digit growth even for us this year as well. So I think there is a very clear differentiation in our customers. If you look at the total market, it's still at single-digit 5 to 6% luxury cars. If you look at total automotive market, it's at 2 to 3%. So luxury is doing slightly better maybe than there, but I think 2-3 percentage points is not the game changer. Having said that, if you look at what's happening in the world, I think it's still great for India because capital markets are strongly positive. Looking at our sales, I think it's not negative. It's actually still growing a bit. Of course, we can always want even further growth. But I think with all this turmoil, one of the things, especially for us, is the exchange rate. The euro to the, it's $100 to a euro, which means that it's a 12% rupee has depreciated in 1 year. We cannot pass on 12% price increase to the market. We have localized, so therefore you can say weighted impact 7-8%. So we have still passed on 2 to 3%. That has an impact on demand. But again, I think RBI has really intervened in the right time. They have reduced the interest rate. We have an NBFC in India, Mercedes-Benz Financial. 50-60% of the cars we sell are via them. We have reduced interest rates there. We have passed it on to the market. So when you look at an installment basis, the customer still should not feel the pinch, though the sticker price of the car for sure has gone up.
Right, so again, 1.5% hike is expected. Do we see any kind of resentment with the consumers or having two back-to-back rate hikes for
and the third one in September actually. So nobody likes it, even our dealers, everyone. But I think this is beyond us. At 89 to 100 walk or 12%. As I said, we are not passing on 8-9% to the market. We are hardly passing on 4-5%. Balance we are absorbing as well. So our profits are also under pressure because we don't want to dampen the market sentiments. I think this is a great time to buy the car. Cars are priced at 92, 93 to the euro. Real euro is at 100. So that's the way to look at it from a value perspective. But I still feel maybe this will cool down. Maybe the euro comes back to 95, the rupee comes back to 95. We can see a better impact. We are doing a lot of localization. For the new E-Class, which we introduced last year, our best-selling car in our portfolio, the entire glasses now we make in India. And that's a big component of the car actually. You have the sunroof, you have all the glasses. So I think we are continuing our push on localization on one side to ensure we de-risk. But yeah, it's a long-term, localizations are all long-term, topics there. So we are committed. But yeah, this is why we say this year will be more flattish kind of a trajectory than a significant growth.
Two things I want to speak about. First is, of course, the India-EU FTA deal. I know it won't create much of an impact for you, but still, it would create more value addition for you as far as demand goes. So, how are you looking at that?
See, first of all, in FTA, we being a multinational, we have always advocated free trade among borders because I think for economy to grow, fundamentally you need free trade. For India as well, I think the Indian automotive component industry, OEMs are all very matured. If we get market access to markets which has money in their pocket, be it Europe, US, UK, so on and so forth, I think it's great for India because there can be a lot of potential. This brings more economic development, more per capita GDP increases, our car sales will go up. Now, there is another fallacy that because of FTAs, luxury car prices will come down. At least I can say that for us, 90 to 95% of the cars we sell in India are locally produced. So, there will be no impact on the pricing. But if overall per capita GDP goes up, I think it's good for everyone. And I think that's the direction we want to take. We are keenly looking forward for these FTAs to be signed and the growth momentum to further go up.
And also, due to the geopolitical situation of, US engaging with Israel and Iran, China backing out for rare earth metals, are you affected with rare earth magnets being, curtailed? Are you speaking to another OEM from different countries? I know Stuttgart is obviously working on restoring that, but still, how are you affected now?
I think post-COVID, our supply chain has really realized that we need to go tier 1, tier 2, tier 3. There are a lot of backup scenarios. At this stage, my colleagues are managing it quite well. As India is concerned, we have no issue on supply chain side. I think we are able to manage this completely well. I'm not sure on the future, but as of now, we have no, at least in the mid-term, short-term, end of the year, we don't see an issue.
Also, lastly, the government has announced the portal where you can actually go and invest money with the PM E-Drive scheme, and of course coming up. How are you looking at it? Because there were reports that you would be interested in setting up, and you actually have an implant here, but you are more keenly looking to localize further, which you are. But what is the real on-ground report now?
No, I think it's a great initiative by the government. This took some time. Last year, we were discussing with the government to understand the scheme. But fundamentally, if you see, this is a great scheme for people who are not in India. For new players to come, they bring in 4,500 odd crores and then they can get some cars on duty free till the time they have a plant. So it's a nice thinking. But for us, we are in India for 30 years. My plant in Pune is a relatively new one. 2009, we shifted 3,000 crores we have invested in India already. So we are not a fresh player. We were the first to introduce a locally produced EV way back in 2021-22. So I think we are ahead of the game. Therefore, for us, the scheme may not offer much, but I think it's a welcome step for a lot of any new entrant who wants to come to India with their EV portfolio. I think it's a great scheme for those entrants, and they should take advantage of it.
And I'd like to also ask you on the government intervention for EVs. The FAME scheme was actually eventually stopped. The incentives was stopped, and you were very in support of government, wanted to give more support. But are you still looking for support for EVs? And secondly, are you looking to increase your exposure to the European markets from India now, considering we have a good localization facility in India?
So firstly, in automotive trade, cars are produced generally closer to the market. So we have US for US mostly, China for China, Europe for Europe. Of course, there is some cross-border trade which happens, but net, like US, we sell 300,000 cars, we produce 300,000 cars in the US. So in India, we are close to 19,000 cars, we produce 19,000 cars. So in that sense, we have to be closer to the market because of the logistic costs and many other things. Coming to the earlier question, so it was about the localization and I think that's an ongoing process completely. So we are fully committed to that. We have a local sourcing office. We have I think a big team sitting in Pune also trying to localize and look at components. We have a lot of supplier ecosystem who's exporting from India for our global plants. On the other side, we have our R&D facility in Bangalore, 10,000 odd people, patents being filed, a lot of R&D on these cars being done out of India. So I think as Mercedes-Benz, we are well set up in India to take care of all these, I would say, upsides as the market develops.
Is there more room for RBI rate cut, do you feel?
I think it's a good setup. Today, the interest rates, we are offering now around 8% for cars. So I think this has been the best ever time when you look at interest rate on car loans to be offered to the market. I think more is always welcome. I would never say no. But I also, the risk is inflation and other related concerns. So we have to wait and see the government positioning on that. But I think right now it's the right balance. We have to wait and watch.
Thank you, Santosh, for speaking to us. So that was Santosh Iyer, MD Mercedes-Benz India, talking about what really is how the market going, and of course more rate cuts are welcome, and of course the demand scenario for Indian markets. That's what he's been speaking about. With camera person Raju in Mumbai, this is Chetan Bhutani for Business Today.
If you like the video, do like, comment, share and subscribe.